Welcome to this video. What will happen if we buy Zbcn with $2,000? We will analyze this. Don't forget to subscribe and like, and please watch until the end to understand.
An upward curve in technical analysis is a visual representation on the chart that shows price movements steadily trending upward over a certain period of time. Such curves generally indicate that prices are forming higher lows over time and that the overall market trend is positive. The fact that the price is currently touching this upward curve marks a critical and decisive moment for the market. The price touching the curve also represents a support area where buyers are actively involved. We know that in the past the price has rebounded from this level and buyers have concentrated here. Therefore, the price bouncing upward from this critical point is of great importance. The price touching the upward curve is a key balance point in the power struggle between buyers and sellers. While buyers make intense purchases to prevent the price from falling below this level, sellers put pressure to push the price down. However, when buyers prevail and the support point is preserved, the price bounces from this upward curve and continues its upward movement. This is an indication that the trend is sustainable and that market sentiment is positive. The bounce not only sends a positive signal to the market from a technical perspective, but also from a psychological one. As investors see the support area, they gain confidence, strengthen their positions, and make new purchases. This drives the price to accelerate toward higher levels. The upward curve serving as support acts as a kind of safe haven for the market. This curve shows that the lows formed over time are occurring at increasingly higher levels and the declines remain limited. Thus, the market generally stays under the control of buyers, creating a solid foundation for the price to continue rising in the long term. The fact that the price is currently touching this upward curve technically confirms that this support is active and strong. A price reaction from the support area positively affects investor expectations and leads to an increase in buying volume in the market. However, there is an important point to note here. The price is expected to react without breaking the upward curve. If the price breaks this line downward, the support level will weaken and selling pressure will increase. In this case, the market dynamics will be negatively affected and a downtrend may begin. A break of the support line in technical analysis generally means that the trend is weakening and the market may change direction. Therefore, investors should closely monitor this level and be prepared for sudden and strong selling movements. While the price not breaking the upward curve shows that buyers are strong in the market and selling is limited, breaking it may reverse this balance of power. This critical moment when the price touches the upward curve is also an important decision point for market participants. Buyers want the price to bounce and continue its upward movement from this level, while sellers put pressure to break this support. In technical analysis, such contact points are usually accompanied by high volatility and increased volume. If the price successfully bounces from this support and is supported by rising volume, the likelihood of the trend continuing increases. Volume is an important indicator that confirms the validity of price movements. Therefore, a price reaction from the upward curve supported by increasing volume shows that buying pressure and market interest are growing. During this process, it is important for investors to carefully follow price movements and evaluate signals supported by technical indicators. Breaks or bounces that may occur at the moment of contact with the upward curve play a critical role in determining the direction of the overall market trend. If the price touches the upward curve, reacts, and this movement is supported, upward momentum increases in the short and medium term. This momentum leads to the testing of new resistance levels and strengthens market momentum. In this way, it becomes possible for the price to reach higher levels and confirms that the trend is continuing. On the other hand, if the price breaks the upward curve, market dynamics change. With the loss of the support level, the likelihood of sellers taking control increases. This may accelerate the downward movement, deepen selling, and cause the price to fall to lower levels. Such a scenario is a situation that investors should watch carefully and is important in terms of risk management. A break below the upward curve in technical analysis usually means that the trend is weakening and that the market may change direction. Therefore, investors should closely monitor this level and be prepared for sudden and strong selling movements. While the price not breaking the upward curve shows that buyers are strong in the market and selling is limited, breaking it may reverse this balance of power. This critical moment when the price touches the upward curve is also an important decision point for market participants. Buyers want the price to bounce and continue its upward movement from this level, while sellers put pressure to break this support. In technical analysis, such contact points are usually accompanied by high volatility and increased volume. If the price successfully bounces from this support and is supported by rising volume, the likelihood of the trend continuing increases. Volume is an important indicator that confirms the validity of price movements. Therefore, a price reaction from the upward curve supported by increasing volume shows that buying pressure and market interest are growing. During this process, it is important for investors to carefully follow price movements and evaluate signals supported by technical indicators. Breaks or bounces that may occur at the moment of contact with the upward curve play a critical role in determining the direction of the overall market trend. If the price touches the upward curve, reacts, and this movement is supported, upward momentum increases in the short and medium term. This momentum leads to the testing of new resistance levels and strengthens market momentum. In this way, it becomes possible for the price to reach higher levels and confirms that the trend is continuing. On the other hand, if the price breaks the upward curve, market dynamics change. With the loss of the support level, the likelihood of sellers taking control increases. This may accelerate the downward movement, deepen selling, and cause the price to fall to lower levels. Such a scenario is a situation that investors should watch carefully and is important in terms of risk management. A break below the upward curve in technical analysis usually means that the trend is weakening and the market may change direction. Touching the upward curve in technical analysis is not just about a line contact, it is also a reflection of market psychology. Investors' confidence in this level affects their positioning behavior. Therefore, this critical point where the price touches the upward curve is a turning point where investors' decisions are shaped and the market direction is determined. The moves that take place here will determine the market trend in the short and medium term and guide investors' strategies. In conclusion, the upward curve that the price is currently touching serves as a strong support area in the market. A price reaction from the support and a continuation of the upward movement is a clear signal that the trend is continuing. This increases investor confidence and encourages new buying. However, if the price breaks this critical line, the trend weakens and selling increases. Therefore, this moment when the price touches the upward curve is a very important turning point in technical analysis. Investors' patience, careful observation of market conditions, and proper risk management are necessary to navigate this process successfully. Thus, the price touching and reacting from the upward curve could signal the start of a new upward wave in the market and present significant opportunities for investors. But we can't make a decision based solely on the curve analysis. Let's look at the other metrics as well. Stay tuned.
The Elliott wave theory is a powerful technical analysis tool that explains market movements through specific wave patterns and is used to predict future price action. According to this theory, market movements consist of a total of 8 waves, 5 impulse waves, and 3 corrective waves. This structure reflects investor psychology and market dynamics, providing important clues about the direction of price movements. The fact that the price is currently in the 3rd wave indicates that the market is in an important and strong phase of the uptrend. The 3rd wave is generally considered the strongest and longest wave because during this stage, market participants buy with increasing confidence and prices rise with strong momentum. In the 3rd wave, the price is expected to reach the 2.272 Fibonacci level. Fibonacci levels are mathematical ratios used in technical analysis to identify retracement and extension points. These ratios frequently appear in nature and financial markets and tend to act as important support or resistance levels for price movements. The 2.272 level is a critical point, often tracked as the extension target of the 3rd wave. When the price reaches this level, the market typically experiences strong momentum and buying pressure, which reveals the potential for the price to rise to $0.018. Reaching this level is a reflection of the strength displayed by the market during the 3rd wave and is a strong sign that the trend will continue. The pronounced increase in price during the 3rd wave represents growing investor confidence and overall market optimism. One of the typical characteristics of the 3rd wave is that with accelerated buying activity, the price rises much faster compared to previous waves. This means that market participants are expanding their positions with positive expectations, and the price is entering a technically strong uptrend. Reaching the 2.272 Fibonacci level has significant impacts on the market not only from a technical perspective, but also from a psychological one. This level is seen by many investors as a potential profit-taking or market reaction point. However, as long as market dynamics and general trend conditions are favorable, the probability of the price moving to higher levels increases if this level is surpassed. Reaching the $0.018 level would indicate that the price has broken through previous resistances and that a new buying wave has begun. This reinforces the uptrend in the market and increases investor interest. However, as with any technical analysis method, Elliott waves also carry risks and uncertainties. While the 3rd wave movement indicates a strong uptrend, sudden changes in market conditions, macroeconomic factors, or unexpected news flow can put pressure on the price. Therefore, it is important for investors to consider market volume, other technical indicators, and fundamental analysis elements while tracking this wave movement. While the price reaching the 2.272 Fibonacci level confirms the target, alternative scenarios should always be evaluated. The price movement toward the 2.272 level within the third wave presents both opportunities and warnings for investors. An increase in volume as the price approaches this level is an indication that the uptrend is healthy.
Investing $2,000 in Zbcn tokens and calculating how much this investment could appreciate in the future requires a highly detailed and comprehensive analysis for sound investment decisions. To conduct this calculation thoroughly, it is necessary to first consider current market conditions, technical data, and the project's potential areas for development. First, by dividing the available $2,000 capital by Zbcn's current price of $0.005, it is possible to determine how many tokens can be purchased. Dividing $2,000 by $0.005 allows the investor to purchase 400,000 Zbcn tokens. This amount forms the core of the investor's position in this coin and is critical in determining the future value of the investment. The token quantity is multiplied by the target price to calculate the potential market value of the investment. At this point, the assumption of a target price of $0.018 is significant. The target price is a reasonable expectation based on technical analysis, market trends, the project's development pace, and industry competition. The $0.018 level represents an increase of more than 3 times compared to the current price, which is highly attractive for investors. Multiplying the 400,000 tokens by this target price increases the total investment value to $7,200. This means a gain of more than 3.6 times the investor's initial capital. For such an increase to occur, the market must have various favorable dynamics and the project must have strong fundamentals. First, Zbcn's technological infrastructure and use cases must evolve, and its user base and adoption rate must increase. The project's development team, roadmap, and updates directly affect investor confidence and can trigger token price movements. If the team delivers regular updates, adds new features, and forms partnerships, these developments are likely to be well received by the market, creating upward pressure on the price. In addition, the general state of the cryptocurrency market is another key factor in determining the investment's outcome. A positive market sentiment, growing investor interest, and high liquidity all support price increases. In particular, rallies in major coins like Bitcoin and Ethereum can positively impact the altcoin market, creating a chain reaction of upward trends. In this context, altcoins like Zbcn can also benefit from large-scale market movements and reach their target prices more easily. Other factors that influence the investment's growth potential include the regulatory environment, market competition, tokenomics, and liquidity. Regulatory decisions regarding cryptocurrency markets directly affect the project's operational scope. Positive regulatory news can boost investor confidence, while negative developments may trigger panic selling. Therefore, investors must monitor not only technical analysis, but also market news and regulations. Tokenomics, meaning the project's token distribution, burn mechanisms, and staking opportunities, also plays a significant role in price performance. If Zbcn has a limited supply, regular token burns, and strong staking incentives, this can restrict supply and support price appreciation. On the other hand, high supply or continuous token issuance can create price pressure and make upward movement more difficult. Thus, a solid and sustainable economic model is considered a positive long-term indicator for investors. Liquidity is also a critical factor for executing investments and ensuring that tokens can be bought and sold. Without sufficient liquidity, investors may face difficulties in making large-scale trades, and this can cause sudden price fluctuations. High liquidity in Zbcn supports balanced market movements and enables even large investors to enter and exit positions with ease. This creates a positive environment in terms of both confidence and stability. From an investor's perspective, the potential for a $2,000 investment to grow to $7,200 if the target price of $0.018 is reached presents an attractive opportunity.
However, investors must be patient and act cautiously in response to market movements. Volatility in cryptocurrency markets is high, and prices can rise or fall sharply in short periods. Therefore, investors should act calmly without panicking and apply risk management strategies. Techniques like stop-loss orders, appropriate position sizing, and portfolio diversification can help prevent potential losses. From a long-term perspective, Zbcn reaching its target price would not only be a one-time increase, but also a sign of sustainable growth based on solid foundations. The project's innovative technology, strong partnerships, active community support, and solutions to industry needs could help maintain price growth. This way, investors can profit not only in the short term, but also in the medium and long term. In summary, purchasing 400,000 Zbcn tokens with a $2,000 investment and reaching a price of $0.018 would increase the investment's value to $7,200. This means a gain of approximately 3.6 times the initial investment and is considered a reasonable target based on technical analysis and market data. However, given the inherent uncertainty of cryptocurrency markets, it is essential to make investment decisions with this in mind. Being aware of the risks, closely monitoring market movements, and remaining patient are the key requirements for success in such an investment. With the right strategy and informed action, a $2,000 Zbcn investment could become a significant source of profit and add value to an investor's portfolio.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risk correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.